So the other statement is the cash flow statement, and it actually is telling us where does all the cash of the company goes. So it can go to operating activities, to investing activities, and to financing activities. It actually doesn't only tell us where does the money go, but actually it's telling us as well where did the money comes, right? So for that we use the cash flow statement just to have like a look into like where money is going. Of course, if like the operating activities are positive, that's like a good sign, because that means that in the current operations of the company is giving out more cash to us. The investment part, if it's negative, that means that the company is currently investing a lot of money. And in the financing activities, if it's positive, that means that the company is getting new financing sources like equity and debt to finance their uh, business. And once again, Coca-Cola here. So as we can see, this is the cash flow of Coca-Cola, and these are the most important parts that you need to be aware of. So the operating cash flow, investing cash flow, and financing cash flow. And of course, the end cash position, which is also good to see, right? Because is like all the cash that the company holds after the fiscal year ends. So if we can see like the operating cash flow, this is actually the same as net income, with the difference that here depreciation of the assets are not counted, right? Because in the net income, if we have like depreciation from a building, we count that as an expense. But of course, since you don't need to pay anything for depreciation, it is counted here in the operating cash flow. So we have it here, right? And also we can get like the investment activities of the company. So of course, if it's negative, that means that the company is investing more money than they are simply receiving money. So for example, if the company decides to buy a factory, it's gonna be negative. And if the company decides to sell their factory, it's gonna be positive. But of course, this is not only like on one stop. This is actually when you combine all the investing activities together. So this is telling us that it's getting money out of Coca-Cola for investments, and of course, in the operating cash flow, is telling us that is that money is coming in for investments. And for financing, the money can be distributed the money can be in or out, right? Depending if they get money or if they give out money to investors. So for example, if the company Coca-Cola decides to pay a dividend, that is negative, and if Coca-Cola decides to get a loan, that is positive. So as you can see here, when we offset the dividends with the debt, they actually end up loaning more money than they give away to investors. And in this, like besides the other two, in this one, I think like a moderate like rate between giving money away and getting money from like financing is ideal, right? And also, by the way, if Coca-Cola decides to sell more shares, there's also gonna be positive, right? Doesn't necessarily need to be a debt for them to finance their cash flow. So this one, investing, like ideally you want it negative, because that means that the company is making some long-term investments, and of course we want that. The operating cash flow, we always want that to be positive, and the financing cash flow, it can be just moderated, to be honest.